And we are live. Thank you everyone for tuning in today. I tried out this new razor. It's a safety razor. It's just like one blade. And I did half my face and it was going pretty well and I got careless. And so I have a bandage on where I totally scraped myself and have a nasty cut, but it's all good. Thank you everyone for tuning in today. We have been reacting to a conversation between Michael Green, who is, I don't know what his exact role is, but he is a high up person at a company called Simplify, and they make really cool ETFs where they implement all of these advanced strategies that you can usually only get by investing in hedge funds, but they have this as ETFs that anyone can invest in. So go check him out. Go check out his work. It's really cool. He's done a lot of great things of bringing quality investment vehicles to the masses. And also Chris Cole, who runs this hedge fund called Artemis Capital, and he is an expert in shorting going long volatility. Normally, going long volatility is a very difficult thing to do. It is expensive. You lose money, although it can help you if the market goes down a lot. It's very difficult. And so he has a lot of really interesting ideas. And for context, I'm not a finance guy. I'm a business person. I'm a venture-backed founder. I'm an engineer. So I know a bit about finance, but I think that these concepts are super important to understand because the mental models that you get from thinking about volatility and markets can be applied in a wide variety of contexts. I really recommend checking out our last stream. You don't have to go and watch all the previous streams reacting to this conversation, but one really good stream maybe after this. This will be a standalone, but after this, go check out this video, Transmuting Volatility into Bitcoin. This was the second part of my reaction to this, and we got into Bitcoin, which is an area that I'm an expert in, and we talked a lot about the political implications of Bitcoin, what the effect that it might have on the economy, and also why or why not it may or may not get banned, and we get into the dynamics of how the government is going to think about it. So I highly recommend doing that. And in general, if you like finding the best content online, the most intellectually stimulating content online, subscribe to my channel because I'm going through all the best interviews and best YouTube videos that I've ever seen, and I'm reacting to them. And I'm breaking it down piece by piece, going slowly through these videos, hitting on each point, expanding on each point, tying it in to themes that you might find interesting. And specifically, I like to focus on technology and the effect that technology has on society. So if that's your type of thing, please subscribe, leave a comment, give me feedback, and like this video. All right, so anyway, let's dive in. And if you want to follow along, here's my channel. You can go down below on this sources playlist. I have all of the major sources that I have reacted to listed in this playlist. So, all right. This is the video. Let's continue listening where we left off. And don't worry, I will recap and I will catch you up to speed on the topics that we have missed. But first, let's just see what they have to say.
Ultimately, a bad analysis of game theory to think that the U.S. government is going to adopt Bitcoin, right? It is not. I cannot. Knowing the U.S. government and knowing the dynamics, I cannot see them forfeiting that right and rewarding this type of speculation with that dynamic. It's never happened in history, to be totally straightforward. And you can say it's different this time because this is a giant consensus type thing, but it's just as easy for the U.S. government to say no, right? And the concern that I have is that the marketing around Bitcoin has focused on the idea that the only way it can be stopped is if the U.S. government is to attack its citizens, right? And therefore, this is a call to revolutionary objectives, right? I think that's very unhealthy, and I think that that is actually a line of thinking and a line of PR that is being actively stoked and communicated by those who are hostile to the interests of the United States. So I think Bitcoin has this unique vector that is a little different than Apple stock, for example, which is larger in market cap than the entire crypto space. But you don't see people going out and massively borrowing against their Apple stock so that they don't have to sell it and incur taxation, and using that to fund additional purchases of Apple stock. There's just not the same degree of leverage.
Yeah, and there's not an offshore framework that allows
not an offshore framework to it, et cetera.
To lever your Apple stock,
right?
20 times.
And the other component is that Apple stock is not being printed effectively by China, Russia, Iran, which people are sick of hearing me talk about. But this is a mechanism increasingly for obtaining US dollars by those who are at risk of not being able to obtain them in other ways, North Korea, et cetera, right? And they're all the dominance of China in this network, some will argue that it's the private sector, so others will argue that the public sector controls more of it than is realized, is somewhat irrelevant in that process, right? Yeah. It's just, it strikes me as highly implausible.
So they were just finishing up this segment in the last episode where they were talking about Bitcoin. And I'm not going to go into all the things that they were talking about Bitcoin last time, but because I don't think they're going, for the rest of this interview, I don't think they're going to continue to talk about Bitcoin. But I was originally going to only cover this interview in 2 parts. And when I got to this part, for some reason, my microphone and camera shut off and there was just technical glitches. So I had to end it a bit earlier than I anticipated. And at that time, I was kind of making a joke about basically, and like, look, I want to just be a little bit transparent here. Like sometimes I'm serious, sometimes I'm not. Sometimes I like to poke fun at people, and I usually poke fun at people that I like, because I like to push people to be better. And I really, really like the cryptocurrency industry. I'm in the cryptocurrency industry. And since I like them so much, I like to tease them and I like to make fun of them. And one thing I was saying is that Mike Green was coming out against the idea of a strategic Bitcoin reserve. He doesn't think that the US government should get involved in holding and buying Bitcoin. And I completely agree with that. I think that that's a ridiculous thing. And basically, my joke is that, a lot of the people who hold a lot of Bitcoin are essentially losers, and they got lucky and they were just buying drugs on the dark web many years ago, just basically doing nothing productive. And they happen to buy Bitcoin and they happen to hold a bunch of Bitcoin. And then there's all these very mid-tier investors who had these stupid businesses, and they stupidly went all in on this thing that no one had any reason to believe would work, and it happened to work. And these people, yes, some of them are impressive, but by and large, a lot of the people that were early in cryptocurrency are extraordinarily unimpressive. So if we were to have a strategic Bitcoin reserve where the US government buys Bitcoin, we would essentially just be giving a massive subsidy. The amount that they own out of the percentage of all Bitcoin is ridiculous. And there's also these organizations that did ICOs back, initial coin offerings back in 2017, that own ridiculous amounts of Bitcoin and Ethereum. And they just did that because at the time the values were low. They did these illegal public fundraising operations, and they just accumulated a shit ton of cryptocurrency. And a lot of basically giant scam projects like very shady exchanges and things like FTX and the Terra Luna Foundation, whatever that was, that scam. All of these organizations accumulated so much Bitcoin and so much Ethereum that it's if you think you're invested just because you went on Coinbase and bought and put in a few thousand, you have no meaningful holding of crypto. And if the government were to spend taxpayer dollars buying crypto, that would just be basically handing a check to the fucking Winklevoss twins, who again, I love you guys. I'm just joking here, but they just have grifting their way ever since grifting Mark Zuckerberg, suing him, getting money from him, off of their idea, like these guys are like cringy idea guys who are like, oh, I thought of this idea of a social network. Like, bro, everyone fucking thought of that. Okay. And then they just happened to stupidly go all in on crypto, like something that was just so unlikely to work. And now they have a bunch of Bitcoin and whatnot. And yeah, they totally mismanaged it. They put their crypto into like in their exchange Gemini. They held crypto and then they put it into some like Ponzi scheme. I forget which one it was. Something where they were giving like way too much interest to all the people, and it went bankrupt. And then they've been in a long court case trying to get that money back and all this stuff. So these people don't need a fucking bailout. They're rich as fuck. They're living great lives. I've met a lot of these people. They are doing just fine. They do not need a bailout. With that said, first of all, it's just the fundamental idea that Mike Green is posing here is stupid. First of all, I already talked about last time about how it is going to be almost impossible to ban crypto, politically speaking. And there's a lot of dumb reasons to believe that. However, if you really know what you're talking about, you see that the interests there's basically so many vested interests in keeping crypto in basically any time that someone attacks crypto, it crashes the market. It creates a giant cascade of bad consequences. And there is a avid community of crypto enthusiasts who are waiting to point fingers, who have already done ridiculous amounts of oppo research on Elizabeth Warren and any person who comes and sticks their neck out and goes against crypto. These people are going to just wage a holy war against anyone who comes out. I mean, look at the amount that people have given shit to Gary Gensler, the chairman of the SEC. There's just no incentive to attack crypto. Even if you're trying to help people in Wall Street, or maybe there's someone who would benefit from crypto going away, that person is not going to benefit from crypto going away as much as people will be mad. And I'm talking about everyday people. I'm talking about, like I was giving the example of, I've had multiple barbers who've cut my hair who have been invested in crypto. And no, they didn't have that much crypto. They had like $1,000 or something. But they would be so pissed just out of principle if it went down. And even if they weren't that pissed, when they when they consume content on social media of people being hysterical about this, and I do think that these people are hysterical, and I do think that there's an exaggeration of how bad it is when the market crashes. Like, people shouldn't be putting all their money in this. I don't feel that bad for people necessarily. But at the end of the day, like, it's just going to cause such a headache for any politician who goes against, and there's a lot of empirical data at this point to support that. If you look at in the 2024 election, across the board, pro-crypto candidates won and anti-crypto candidates lost. And there was a significant amount of political contributions paid by the crypto industry, and that is only increasing the level to which there's crypto money in politics. So it's not going to get banned. But more importantly, the thing that he was just talking about with the issue is that he was basically implying that countries like Iran, China, and Russia can use cryptocurrency to evade sanctions. This is a horrible point. First of all, any criminal activity is really bad on crypto. Like, I don't use crypto. I am an engineer that works on crypto, but I don't use crypto for anything that I wouldn't want to be, like, I don't use it for everyday purchases. I don't use it for anything like that because it will be traced back to you. Privacy has not been implemented. It is just fundamentally not something that you want to do when you're doing anything shady. It's just a horrible idea. Like, nobody in the industry would ever recommend to do anything even remotely shady using crypto. Like, if you do transactions on crypto. You should absolutely report it on your taxes. You cannot evade taxes. You cannot accept money from shady people that will be linked to you. So you better know who you're doing business with. You need to be careful. It's not, I think we should get to a place where there is high amount of privacy guarantees in the crypto industry, but we are not there yet. So don't do that. So first of all, it's not good for any black market type activity, but let's just imagine that Russia and China and all of them don't care, because what is anyone going to do about it? And let's just say that there were people out there who were willing to violate sanctions to, or maybe, you know, it's just they're using it for trade amongst themselves. So like a Chinese person and a Russian person are using cryptocurrency to transact, and neither of them are bound by US sanctions. That, okay, like that is a possible scenario, but even in that scenario, like they are going to have mechanisms for doing commerce together if they're not within the US sanctions regime. Like there's BRICS, they have agreements to use rubles and yuan, and this is already possible. Crypto does not enable these use cases. But philosophically, sanctions are just a horrible idea. It's just not a good way of exerting power, because essentially the US has this amazing privilege, having the reserve currency of the world, the safest asset where people flock to this asset in times of global uncertainty. This is like a giant subsidy to the US people. And, you know, a large extent, I think there is a good argument that our military might puts us in this position and pushes people to use the dollar and depend on the dollar and integrate with the US economy. And we have a powerful military, we have a ridiculously powerful economy, and we have positioned ourselves to have the reserve currency of the world. And we can, at will, print currency and give it to ourselves. We have that capability. That's free money. That's literally a free ability to tax everyone else in the world and give it to ourselves. That makes us rich. And so then there's like people in the State Department who want to play games and want to, you know, make things happen abroad and all this stuff. And so what they do is they basically sell the credibility of the US in order to exert leverage on other countries. So they spend our credibility. We have all this trust in our dollar, and then they make the dollar less reliable. They make people value the dollar less because they put in all these rules, and it makes people not want to use dollars, and it makes people want to look for alternatives to dollars. If the US remained super credible, and in cryptocurrency, this is an idea called credible neutrality, where you know that essentially the Ethereum protocol is not going to go against you. You know that it's going to take a neutral stance, and it's just going to do what it set out to do. It's not going to go and play political games. If we had a credibly neutral US dollar, even adversaries like Russia and China would use the US dollar, because it would be something that you would be able to trust it because Russia doesn't trust China, China doesn't trust Russia. There are issues with coordinating. And if the US was trustworthy, they would use that when coordinating with each other. And so essentially we are making ourselves poorer because we are choosing to use sanctions to exert control abroad. And a lot of times, like, you can imagine potentially there could be a scenario in which you would want to do something like that. But the issue is that the State Department, when they decide to do this, they don't take a poll of all the US citizens and do some kind of referendum, or they don't have Congress authorize this, and they don't have a lively national debate or anything like that. This is behind the scenes stuff. This is things that they do behind closed doors. We don't know why they do it. What have we been doing in Ukraine for the past however many years? Like where there was like some coup and now there's a war, and it's like you can give all these reasons, and I'm sure there's someone who can come on here and talk to me and give me the reasons why we should be in that war. I'm not trying to have that debate. All I'm saying is that I don't feel like I was consulted or made aware of the types of things that our government was doing in Ukraine prior to us getting into this conflict. So this is not a transparent process. This is some bureaucrats in the shadows deciding to make all of us poorer to advance some agenda. Maybe they're right. Maybe they're smart. Maybe they have good intentions and good reasons, and maybe they're competent. I doubt it, but maybe they are. But we haven't had that case made to us, and we haven't had the opportunity to evaluate that decision-making process. And so I just think it's ridiculous that the government has the capability to do sanctions without a large buy-in from the population. And another thing is, it's just been used so recklessly at this point. First of all, after using this on Iran and Russia and all these other countries for a long time, Venezuela, there has emerged a shadow global economy that is basically a bunch of sanctioned countries and countries that don't care about sanctions, all trading with each other and building up the infrastructure to do commerce outside of the purview of the United States. So this is a functioning system that has been basically preemptively constructed that is completely outside the control of the United States. So if the United States now goes to war against, let's say, China, as an example, which I don't think we should do, by the way, and I'm not ardently anti-war or anything like that. I could see a potential case for war with China, but I'm not sold on it. That's going to be a topic for another video. I don't think that we should go to war with China, but let's say we did. Let's say we went to war with China. Now, instead of at that time putting sanctions and crippling them at the same time as attacking them militarily, what we've done is we've created a global trade network of sanctioned countries and countries outside of the US's orbit that will already have established trade routes and payment infrastructure and all of these things. And now they can do commerce and sustain each other. And I like to think about sanctions kind of like drug dependence and withdrawal. So imagine you're doing drugs like heroin, or honestly, I don't know that much about drugs, but you're doing drugs and it's in your system. Like one drug withdrawal I know a lot about is caffeine. So you're doing caffeine. You're drinking caffeine. It's all good. Yum, yum, coffee, Monster energy drink, whatever. And you're energized. You're feeling good. Maybe the effects wear off. You don't really notice it. Okay, now you want to quit. So you quit. What happens? Well, now that chemical that's been in your brain and your brain has been dependent on that chemical being there is no longer there. So there's like adenosine receptors. I'm just saying science terms. I don't actually know this biology. But there are different neurotransmitters in your brain that have certain levels, and when you take out that chemical, basically the levels of certain things crash and you feel like shit, and it's really hard. And caffeine is bad, but there's benzos and heroin and alcohol. These are much worse, and people can die from this. But because essentially this exogenous chemical becomes a core part of your cognitive function and the chemistry within your brain and body. And when it's gone, things start to malfunction. But typically, when you go through withdrawals, it's really hard for a period of time. But then your body reorganizes. It's a complex system, so it kind of heals itself to an extent, and it gets used to not having that exogenous chemical. And I'm saying this is not always true, but it's usually true. And then at some point, you are no longer dependent. So for example, let's say you're addicted to meth and your supply dries up. You're going to be having a very hard time at first, but eventually you won't actually have a hard time. Eventually you'll be fine, presumably. And so let's relate this complex system that is the body to another complex system, which is a global economy or a national economy. So now let's just take Russia as an example. So we put sanctions on Russia. That is a very hard thing for them to go through. It's very, I mean, they're not even done feeling the full extent of what the sanctions are going to do. And I see a lot of stuff online about how Russia as economy is doing great. I highly doubt that. There's a lot of ways to make to fake that your economy is doing well, when in fact it's not. I think it's probably suffering quite a bit. But but at some point, the trauma of disentangling the commerce with America from the Russian economy is going to be resolved. And there was a dependence because there were businesses in Russia that were selling to the United States, that were supplied by companies that were, followed the US sanction regime. And what happened was, that's really hard when all that goes away. Now these companies need to be self-sufficient. They need to find new supply chains. They need to reorganize everything. It's really, really hard. The flow of goods and services in and out of the economy is completely altered. But over time, they just find new ways of doing things. Maybe they shut down a lot of businesses that were dependent on foreign commerce, and these people, maybe they declare bankruptcy, maybe they retire, and some people start new businesses. Like, there's a lot of things that happen, and eventually the economy will emerge and grow and continue to grow and develop without any interdependence on the US economy. So now let's say that the US then at that point goes to war with Russia, or let's say China, because it would be even more, aside from the nuclear threat, China would be a more a difficult military battle. Well, that would be the ideal time to do sanctions on China, would be at the point where it would hurt them. Because, I mean, it would hurt the US too, but imagine all of Europe, all these other countries stop trading with China all at once. That would be very hard for China. Now imagine trying to put out that fire while also fighting a military battle. This would be devastating. It's like, imagine you're going to fight someone and you know that they are dependent on some drug and you take that drug away, and now they're going through withdrawals and they're trying to fight you. That's the time to do sanctions. That's not even sanctions. That's just war. You don't even need anything separate called sanctions for that. You just are like, yo, we're at war and you guys better not trade with them. Like, you say that to your allies. Like, you don't need sanctions for that. So, but yeah, you can have sanctions. But the point is, you should use them during war. You shouldn't just use them preemptively, but, we think we're going to go to war with them, so let's do sanctions. It's like, bro, that's retarded. That means you have no leverage over them. What you want to do, I'll tell you what you want to do. You want to get all the wealthy people in a country like China or Russia to, for example, like come and like invest in the US, like own assets in the US, like sell them farmland and stuff. Like, people don't want China to buy farmland. Like, you want them to like, get like a cash flow, like TikTok, like make a bunch of billions of dollars, and let them own assets in the US and in Europe, and you want them to like send their kids like to these schools and stuff. And then when you go to war, you're like, okay, now you're fucked. You're fucked. You are so fucked. We are going to strip all of these investments, basically confiscate all of your property. We're going to like arrest your family. We're going to do this and that and this. Like, you're so like, all your rich people are fucked. All the powerful people in these other countries, we are going after them. And that we have a leverage over them, and everything they're used to, that ends now. And that is a very big deterrent, where you can kind of exert, when you have someone bought in to your society in the domain that you concretely control, you can exert leverage over those people that have that exposure. And those people are typically ones that have a lot of power within the other foreign countries. So for example, like just the aristocrats and what do they call them? Oligarchs in Russia, right? If they have a lot of assets in Europe, Now Europe has leverage that can pressure them to make sure that Russia treats Europe well, because there's a threat that they can lose a lot of things that they like if things sour between Russia and Europe, and that is what happened. But all of that is to say, the time to do that is not before. You don't say, oh yeah, we're going to maybe go to war, so we should do some sanctions now so that they have time to adjust and completely reorganize their supply chain so they're not dependent on us anymore, and that we can never now exert no more leverage on them. And also we ruin our own credibility. And because of reasons, some bureaucrats decided, and that's just why we're doing it. So yeah, the point is that sanctions are stupid. Sanctions are so fucking stupid. And we should do sanctions at the time that we go to war. It should be similar to going to war. It should be something Congress is supposed to declare war. And we have not been doing that recently with all the wars we've been getting into. But we should. We should do it that way. And Congress should declare war. Congress should also, in conjunction with that, put sanctions, but we shouldn't be doing it at other times. It shouldn't be something determined by bureaucrats, and it shouldn't be something just determined by the president's whims. It should be an act. It should be basically like a sub-act of war, and it should kick in when war is declared. And it's just a bad thing. So, point is that it doesn't matter what Iran and China and Russia do with crypto. First of all, you're stupid. You're so stupid if you're using crypto to do things that are illegal. Like, you're so stupid. Just stop. Hey, if you're watching this and you're doing something illegal with crypto, like, bro, first of all, cool. I know it's badass to be a criminal and do stuff that's illegal. Like, I'm not a hater. Like, I get it. But just like, this is some advice, personal advice, as someone who works in the cryptocurrency industry. Okay? Don't do illegal stuff with crypto. This is not saying you shouldn't do illegal stuff. Like, go for it. Like, I'm all in favor. Go for it. Do whatever you're doing. But don't use crypto, you idiot. And yeah. So it's doesn't matter, basically. It doesn't matter. And the people who are obsessed with sanctions are destroying this country. And so it doesn't matter. It's, first of all, it's unlikely that this will be substantively used to avoid sanctions. And even if it was, that doesn't even matter, because sanctions are bad. Okay, let's keep watching.
I do think, though, that there is a broader issue around how we choose as a society. And, viewers will often ask why I don't consider the rest of the world in this analysis. At the end of the day, I am an American, and I have to speak for my own interests and my own analysis of this. And people will point to, Nigeria or Venezuela, right? We don't set global policy on the needs of failed states, right? Yeah. There are other ways that we can handle the humanitarian concerns around that. We don't discard the entire monetary system so that we can, help the vulnerable population. That makes me sound like a terrible person, and perhaps I am. I have various people who are close to me that might disagree with that, but the underlying features that are being described just feel to me like they're unacceptable choices going forward.
I mean, I'm relatively agnostic. I might come off as anti-Bitcoin. I'm relatively agnostic. I strongly agree with you that I doubt the U.S. government, or for that matter, its allies, will ever fully adopt Bitcoin as part of its currency regime. It's far more likely that you have a dynamic where, maybe we develop our own cryptocurrency, or there's some other framework of that. But I whether it's a viable asset going forward or not, I'm curious about it. But certainly, it seems like there's a lot of bad actors and a lot of excess leverage. Even the Tether story behind the scenes is incredible.
Yeah, I mean, I do agree with this. I am not 100% sure that people won't adopt Bitcoin. I could see that as a possibility. I don't think the US will adopt Bitcoin anytime soon. It would have to be like some kind of scenario where basically everyone else is using Bitcoin. I do think that some allies could adopt Bitcoin theoretically. We're already seeing El Salvador adopt Bitcoin. Potentially others could. But I also don't see it as a Bitcoin victory as inevitable. A Bitcoin is just one cryptocurrency. It remains to be seen exactly how things play out from a monetary perspective. And I'm not even sure that, cryptocurrencies necessarily are the main currencies that we use going forward. And this is kind of a tricky subject because, in a sense, currency or money is actually a very it's a point of centralization in the system, and it's not necessarily ideal. Now, I'm a capitalist. I'm a free market person. I believe that you cannot do central planning. Communism doesn't work. The reason why is because basically the economy is a complex system, and complex systems I'm not just saying, oh, it's complicated. I'm actually, a complex system is a formally definable thing. And this is something that comes up time and time again in science. And there are properties that we know about complex systems, which basically makes them unpredictable. And the economy is a complex system. So if you try to manage an economy using a centralized process like central planning, totalitarian government control, you're going to fail because you're not going to be able to predict the behavior of the economy based on your actions. You're not going to be able to determine what actions you should take as the planner that would make the economy successful. The more you get involved, the more things are going to fall apart because you're going to make blunder after blunder. It's just too difficult to manage. And there's a lot of great reasons to believe that. Maybe for another video, we can go into exactly why the economy is completely and utterly unpredictable. If you think the economy is predictable, I recommend you go and try to trade stocks and try to make money. It's very hard. Basically, in general, it's not possible. There are certain ways that on the margins, very smart people find loopholes in the system to make really great excess returns in the market. It's possible, but that's usually not because they actually understand what's going on in the economy, but usually because they found some sort of systemic advantage where they can like tap into some kind of flow and front run someone and do stuff like that. But all that aside is that the economy is complex. It is way too big to govern. So I am not a believer in communism and central planning, but I am a believer in capitalism. But I do kind of like the idea of abolishing money. I think that money is actually evil. And okay, hear me out on this. Not in the way that socialists say it's evil, but essentially what money is money is a routing technology. So we know this classic scenario of somebody has eggs and they want shoes, but they don't know the person who makes shoes and wants eggs, so they have to find. But if the person who makes shoes, they want cattle, so they trade the eggs for cattle, and then they trade the cattle for shoes. My headphones just died. 1 second, let me switch headphones. Sorry about this delay. Let me just double check that this is working. I think this is working. I'm just going to play it for a second.
Well, the tether.
Okay, yeah. Okay, I do hear it now. Okay, great. So anyway, as I was saying, when you're trading, you're doing just barter. You have to find a route to swap one asset for another asset. You have, for example, eggs and you want shoes. I already went through that. I'm not going to go through that again. You have to find the people and you have to basically string together these complicated trades in order to get what you want. And that's impossible at scale. Like maybe you could do that amongst like 2 or 3 people, but once you start getting to a million people, that's going to be impossible. There's no way you're going to find out if you have like, you know, what I'm not going to keep going through these scenarios, but like you have chairs, like how are you going to buy a TV? Like how are you going to make that happen? What you want to do is everyone routes their trades into a single asset, which is the money supply. So you get money. So you have chairs, you swap it for dollars. You have dollars, you swap it for a TV. And everyone goes into that asset, and you know that everything is just one hop away. Now, you can still do barter. Like there's nothing that makes it, like barter is not illegal. I mean, people don't even bother doing it, but you can trade if you have, you know, if you have like an Xbox and your friend has a PlayStation and you want the PlayStation, he wants the Xbox, you can just trade. Like there's nothing stopping you from doing that in the modern day. But like in general, I mean, and that might actually be efficient. You already have the two things. But the point is if you want an Xbox, you can just use dollars to buy an Xbox. And you could also, for example, sell your Xbox, get dollars for the used Xbox, and then buy a used PlayStation. That's totally possible too. And so maybe you don't know somebody who wants to trade an Xbox for a PlayStation. I don't think many people do. If you did, you can go ahead and do that. But then you can also swap into dollars and swap to this other thing. And that is one hop. That's pretty nice. Anything that you want to buy, essentially, is one hop away. You just go to dollars from whatever you have. Usually people sell their time, their labor. They go into dollars, and then they take those dollars and then they buy goods and services. So for example, like this is like a pretty great example. You go to job, like let's say you're a programmer, you go to work and then you need a massage. You get paid in dollars. So you sold your labor. You did an hour of programming. You got paid, and then you go to a masseuse, you give them that money, and they give you a massage. In a sense, you traded labor. You did an hour of coding, the masseuse did an hour of massage. You traded labor in a sense, but you didn't have to actually find a masseuse who has an app idea. You didn't have to do that. You just got dollars and you gave it to them. So that's really powerful. Like it cannot be understated how powerful that is as an accelerant to commerce, and how that has been a fundamental driver of economic growth throughout history, throughout the millennia. And we're talking about money dates back to thousands of years ago. They were using shells, they were using cattle, they were using gold and silver and all these things. And bank technology has developed, and we can go through that history. It's not important. It's been a very important driving force. However, we are getting to a place, we're not there yet, but we're getting to a place where that is not strictly needed anymore, because we actually have the computational and power and the not just the computational power, but also the what would we even call this? Like the bandwidth to do swapping just between any arbitrary thing. And you don't necessarily need everyone to be in one currency to have this really nice routing. You can just actually use compute, and people can say, I have this, I want that. And someone else can say, I have this, I want that. And then there's a computer can actually just map all of these trades together and solve for any sort of thing, any sort of swap that you want. So like, I'm not saying it will exactly work like this. I'm not saying this, but like hypothetically, you could have some kind of digital system that you say, I'm a programmer, I want to work 1 hour on someone's app idea, and I want a massage. And you could have a masseuse say, you know, like, I want to give a massage and I have an app idea. And then you can have those two people matched together digitally. And then they can mutually provide those services, and the programmer and the massage could both get what they want. You don't need money. And another thing that you could do is, if maybe there's not a pair of those, but there's a third person, and that person has an app idea and they have something else that the masseuse wants or something along those lines. And you could now combine 3 different intents, as we could call them. People have an intent. I want this and I'm willing to pay this. And you can now bundle these and solve them. This is a possible thing to do in the world. And we'll get into why you might want to do that. But before you think that's interesting, but it's very naive, it wouldn't work, before you tell me that, you're already wrong. Sorry, you're wrong. That's what happens in cryptocurrency already. We are already building these types of things. And it's we have basically these decentralized exchanges where there are different trading pairs of basically all these different assets. There's different trading pairs, and there are basically systems like that where people want to make these trades, and there are these companies that run these what's called solvers that take the intents of what people want and they bundle them and they execute them together, and they make these markets very liquid and they make them function properly. And you don't actually need an intermediary to solve. You don't need a point of centralization. So we have all these. So now what's happening is we have all these separate protocols that are not even interconnected. And we have all these different assets that are not coordinated together. And you can now and there's no like central point that all of these go, but yet these decentralized protocols are actually solving and facilitating commerce in like the blink of an eye. You say, I want, to sell this and buy this, and it will actually execute these trades for you. Now, this is not labor. This is not your time programming and or giving massages. This is crypto assets. But also like this is not just one cryptocurrency like Bitcoin being money for everything. This is a bunch of different arbitrary assets that are now being swapped between. And one thing that, there's a lot of restrictions on what crypto assets could represent. And we're very early in this, and this infrastructure is still being built. But it's going to be very interesting as we see crypto eat more and more into society and break more and more into society, how this will now facilitate commerce at a large scale. But but here's the thing. This is happening, but it's bad. Money is bad. Money is a point of centralization. It's a point of failure. It is something that has throughout history been systematically exploited. It's because whoever controls the money supply has an immense amount of power. Even subtle decisions to direct the flow of new money in different ways can enrich individuals and hurt others. And over time, like I'm not talking about let's just take politics out of this. Let's look at history. In history, those that have controlled the money supply have inflated it and abused it. And that is what you would fundamentally expect from a centralized system. That is 100% predictable. And so the way I see it is that if we could eventually move away from having a centralized system, we already live in a world with Forex. There's many different fiat currencies that trade amongst each other. And then now we're expanding this, and now we don't just live in a world with a bunch of national currencies. We now also live in a world with many orders of magnitude more cryptocurrencies. And think about where you allocate your resources. You go to work and you earn a paycheck. So you're selling your time, you get money, you get dollars. What do you do with those dollars? Maybe, you could do any number of things, but let's just imagine that you listen to financial advice on YouTube. Like, let's say you listen to Dave Ramsey. I love Dave Ramsey. But perhaps you listen to Caleb Hammer or Graham Stephan or whatever his name is. All these people, these gurus. What do they tell you to do? They say, have an emergency fund. Put some money into a very stable asset that's highly liquid, dollars. So you maybe get a high yield savings account or something, and you put a few thousand in there. But then what do? You don't just have a few $1,000s, presumably. You're making a salary, you're saving. You have to save at least 15% of your income, right? So what do you do with that? That's most of your money. Your emergency fund is just a small amount for an emergency. And you just need a little bit in a checking account to pay the balance of your monthly expenses, which hopefully are not too high. Hopefully you're saving for the future. So what do you do with it? What do you do with it? Do you keep it in cash? No, you put it into funds. So most of the money that you get is stored in non-dollar assets already. So you own, let's say, an index fund of the S&P 500. So then by doing that, now you're owning shares of companies, some of the biggest, best companies in America, and that are highly liquid. And so you're already basically holding 500 assets, and you're swapping into that. And that's where you prefer to store your money rather than money. Like, you're not using currency to store your money. You're using investment vehicles to store your money. And so you're already doing that. And then you have a house, you have some money in real estate. And then, you go to the grocery store, you buy food. And this is a physical thing, but your money's in food. Like, that's it. You have maybe I have hundreds of dollars in my fridge, right? And the point that I'm trying to make with that is that you're just holding a small buffer of cash at any given point. We already live in this future. And the thing is, though, is that it's just a way less efficient version of it than if this was built on crypto rails. And I'm not trying to make this a pitch for crypto, but what I'm trying to say is the way that these markets are evolving is very interesting. And I can see a world where we have some relatively stable assets. I'm not exactly sure how it would necessarily work, but you could literally have a world without the dollar. It's totally conceivable. And I'm not saying Bitcoin would be the currency. Perhaps, to some extent, I think it's interesting. It is interesting. You would want some semblance of stability, something that has such a low volatility that it is similar to the dollar. You would want that in your portfolio. I don't know if the dollar would go away and it would just continue to be a very small part of most people's holdings. But perhaps there's some interesting financial engineering that can give people, hedge against volatility in the markets. And it could be done in a fair way that's not extractive if these things are designed properly. It's an interesting idea. It's dangerous to mess with things and to build complicated financial systems. I'm not trying to carelessly tell us to go into everyone should adopt some sort of DeFi protocol that has engineered stability into something that shouldn't be stable. I'm not saying that. I'm just saying I would love to explore this future and see what we can actually build. And just imagine, if you think this is far-fetched, just imagine this scenario. It's not crazy at all. You work in at a company and you're not getting paid in dollars. Instead, you get paid in shares of an index fund because that's what you're going to invest in anyway. And then when you hold $0 of cash. And I'm not saying this is a good idea because I think maybe the fluctuations in the price of the stock market are too high, but let's just pretend for a sec. You have no cash at all, zero. You have shares of the S&P 500. This is what you get from your work. And then maybe you have an automated strategy when that goes into your account to put 10% of that away in other investments. Maybe you go out of that index fund and into Bitcoin or into something else, debt instruments. And imagine you have some sort of hedge in place. And this is all automated. So you know that there's going to be a very high degree of stability in your holdings and all of that. Let's just imagine that was properly implemented and it worked and it was solid. And I do recognize also, by the way, there is complexity in this. And these guys know better than I do. These two guys, these are experts. I'm talking shit to some extent, but this is all for fun. I respect these guys, the hell out of these guys. So they would know more about how to construct this type of a thing. And they're probably, if you don't have an asset like the dollar, it's probably significantly harder to create a stable asset. So I want to throw that caveat in there, and they know more than I do about this. But the point is they pay you in stock, and then you, and like imagine like these stocks are powered by crypto, and there's a lot of implications there, but we won't get into it. And so your company that you work for pays you in stock, and then you pay that stock to the grocery store. You go to the grocery store, you swipe your card, and it just transfers them shares of stock. That could totally work. I mean, you could even set that up now. You don't even need anyone to adopt this. If you wanted to do that, you could create a fintech platform that pays in stock, and you could just pay your employees in stock, and then they can have a debit card attached to that, and they swipe it, and then it trades the stock on the market. It's super liquid, and then the store gets cash, and you pay cash, but the employee gets stock. I mean, they actually already have that kind of a thing for crypto. There's a pay in crypto type systems. You can do your payroll in crypto, and then the employee can actually receive crypto, and then they can have a debit card that then trades the crypto on the market. So the store actually gets cash, and the business gets cash, with the person just deals in crypto. That's totally possible already. So this is just not a far-fetched thing. The point is look, we're entering a multipolar world. The US dollar is a huge asset. I'm a huge fan of the US dollar. I'm rooting for the US dollar. I live in the US, so I want to be rich. So I'm rooting for it. But I'm also not someone who is super bearish on the US. Like, I don't think, BRICS is going to take over or anything like that. I don't think that. I'm very bullish. I think America has a lot going for it. But still, we are in a multipolar world where the US is not the only game in town. The US dollar is not the only game in town. Fiat is not the only game in town. And it's just increasingly looking, if you just kind of look at the trend of US dollar dominance, you'll see that it's going down. And I don't think that fundamentally money is necessary. It's a routing technology if you have very low compute and very low bandwidth and latency in your communications. But if you have a global internet with high-speed trading and a lot of compute, you can actually, people aren't actually buying and selling that many things. The amount of compute that we can throw at solving transactions is way more than the amount that people trade, because there's only like a couple billion, 10 billion people in the world or less or something. So they're not each person's not trading that much stuff. So this is easy stuff to compute. And yeah, there's some hard graph traversal problems and stuff, but for the most part, it's easy. And there'll probably be major assets that a lot of things pair with and trade into. Like Bitcoin could be one, or the US dollar, or shares of the S&P 500, or just shares of NVIDIA, for example. Lots of things can have trading pairs with that. And then you can make multi-hop trading routes, which is totally unrealistic if you're doing it manually, but in an automated way, it should be relatively simple to route trades without a medium of exchange. That's why it's called a medium of exchange. And yeah, maybe you can imagine some scenario where it is hard to find a way to swap one thing for another thing, but realistically, there's a lot of times where it's hard to, even if you have money, but you still can't buy some kind of Picasso or something. There's not necessarily on the market, right? So there's things that money can't buy. So there's always going to be these edge cases, but for the most part, it would work. It would completely work. We don't need money. Anyway, that was a big tangent, but yeah, let's keep watching and seeing what they have to say. We have a lot to learn from them.
Story is one example of that, but the broader picture around DeFi as it exists today, I would argue, is and I'm very sympathetic to the value of tokenization. I'm very sympathetic to the overall value of crypto as a form of financial innovation happening within a framework, right? But I just want to emphasize that we've seen what the actual source of these excess, the high yields that can be earned in things like DeFi, et cetera, are, right? In our world, I would argue it's the equivalent of people writing puts on the Euro Swiss because the Swiss National Bank has assured in 2015 that there is a 120 floor and they're not going below that, right? There is when you're engaged in the process of investing in stable coins and using that as a lending platform, what you're actually betting on is that floor. You're betting on the dollar floor. You're selling puts against that asset. And of course, there is quote unquote yield associated with it. We have people playing with this with degrees of leverage that are dangerous, and the awareness of what is happening is very poorly disseminated.
Yeah. Okay. So Mike is completely right about this. There is a ton of leverage in crypto. It's very circular. There's a lot of issues where basically, I mean, fundamentally, finance is meant to enable productive work. It's like you're financing work. So you are either lending money for someone to do something, to work on something and build something productive such that it will generate a return that can, pay back the debt, or you're buying a share in the future earnings of a venture. And so you give money now so that you can get that share later. That's that's the purpose of finance. And like insurance, it allows people to operate businesses. So that's the whole point of finance. And crypto, unfortunately, is a very circular thing. And it's kind of a bootstrapping problem trying to get this industry going. A lot of this is basically like these protocols, these DeFi protocols, where you can trade and take leverage and take all these like complicated financial positions on these crypto assets. And the crypto assets are actually just tokens of other DeFi protocols. So you're just betting, you're in one DeFi protocol and you're taking positions on other DeFi protocols. And you think, well, that's valuable because you're able to use that to take positions on other tokens. But those tokens are also DeFi protocols. So then no one has ever actually established the reason why you want DeFi in the first place. And there's a bunch of leverage and there's a bunch of hype and bullshit. And this is the open internet. It's permissionless. It's open source. Anyone can say anything. That comes with a degree of stupid people participating. And then it's so volatile that then the worst, most degenerate people on the entire planet think, oh, I can make money doing this. So they go in and they're so stupid, they don't realize that they're not actually making money in the long run. Just because it goes up, they hold it, it goes down. I mean, there's so many people like that. They think that they're going to make money and they're not. And there's a lot of misinformation. And then one of the most reliable ways to make money is to sell people the dream of making money and then charge them or like front run them, like get in on something and then pump and dump and all this stuff. So it's a big problem. It's a big problem. There's a bunch of misinformation about crypto, which is what you get with a permissionless, fair system where anyone in the internet can participate. I think it's inclusive. I think it's good, but that's true. That's a downside of it. It's over levered and it is circular, and that's not good. But what I would like to see is DeFi finance actual productive work. And unfortunately, I think the biggest hurdle in this is just regulation, because people who are productive don't want to enter crypto because of the legal risk. So they're being crowded out. And crypto has a potential of absolutely disrupting venture and small business financing. It could totally be a game changer, but doing it legally is very difficult and people just don't want the headache. And if you're a skilled business owner, you don't need to do that because you're able to finance your operations without going through crypto channels. You can do it through venture capital, which is much harder and needlessly, or using other types of financing. So the most capable people aren't in crypto because they don't want to take the legal risk, because they don't need to take the legal risk, even though it would be marginally better, but it's just not worth it to them to take the legal risk. And there's also just all these, reasons why getting real world assets in the crypto ecosystem, there's, again, lots of risks there. It's just not the most efficient way. It's a very difficult thing to do when the government's not on your side to actually take real assets and put them on the blockchain. So completely agree though. Completely agree. I think it's justifiable. It's not a condemnation of the crypto industry. And Mike Green did say he's a big fan of tokenization, so I think he totally sees this too, and he would probably agree with everything I just said in this segment, maybe not in the other segments, but he would definitely agree with that. I think, and but yeah, he's right. He's absolutely right, and believe me, I mean, I already talking shit about people in the industry. Of course, I say that with love in my heart. It's because I love them, and it's just for fun. But I'm also a big critic of crypto, and another time I will do more to expose all the amazing or horrible things that goes on. So let's keep talking. Let's keep listening.
Dominated, right? Most people think that the excess returns are tied to equity-like characteristics, that as the adoption occurs, that there's value accruing to the system. And by participating, I get a piece of that value. That's not actually what's happening. You're selling insurance contracts, and you're putting yourself in a exchange where the smart contract features that you're very excited about are functionally designed to very quickly and methodically strip those over-collateralized assets away from you in adverse conditions, right? So it's my problem with it is the marketing dynamic and the language that has emerged around it and the lack of regulation. And to your point on the central bank digital currencies, we know that's the direction that it's going to go, right? Bitcoin is, as much as people hate to hear this, it is MySpace to the ultimate CBDCs. And the biggest challenge, I think, is that while $1.6 trillion sounds like a lot of money, it's just not that big. It hasn't been that big, and the awareness has not been that high. And I would just suggest that it's really rapidly growing.
How much of that is driven? I mean, to this point,
I agree. Things are moving towards CBDC, central bank digital currencies. That is going to happen. I think it could be a good thing if it's done properly. I don't have a lot of faith it'll be done properly. It could be dystopian if everything's tracked. You're forced into this system where everything is, you have no privacy. That would be bad. But on the other hand, it is possible that you could actually have a dollar that is guaranteed, it has privacy guarantees. And I mean, it's like, to have them not put a back door would be crazy. I wish they wouldn't. It's hard to imagine, but like, I do think it is possible. And it could be something that is verifiable by other nations, that no funny business is going on. There could be very transparent rules. It could, we need to at some point talk about the Federal Reserve and the problems with the corruption around the Federal Reserve. It's a big problem. Perhaps it could replace the Federal Reserve to some extent. I mean, that's a complicated subject, but I think things are going in that direction. I'm not a hater. I'm not a super big CBDC hater. I think if it's done right, it would be actually awesome. But unfortunately, I just don't think it will. So that's what I worry about. With that said, I don't think we need more regulation. We do not need regulation. Regulation just basically ruins things. And it's just too early to know what needs to be regulated. We need to let the market find its footing. We should just literally actually deregulate it. The problem is there's too much regulation. We have all these stupid laws like the Howey test. It's not a law, but it's like a doctrine or something. I don't know what you call that, but it's not a law. It's just like how the SEC determines if something's a security. And I guess it's substantiated by case law. I'm not sure if that's going to be held up or if that's going to be kind of rolled back now that there's the Chevron doctrine was overruled. But the point is there's these things and there's security laws and there's all these know your customer, anti-money laundering laws, all this stuff. This absolutely destroys innovation. It's horrible. It would not be better if we have more of these rules written by people who just, it's like nobody knows. Even people in the industry don't know what kind of regulations we need. Let's just let it play out. Let it play out. And we'll decide later. I promise we'll get some regulation at some point. I know people are so thirsty to regulate things. Just let us figure it out. It's okay if some people lose some money. Like, just relax. It'll be okay. And we don't need regulation. We just let people fucking fundraise. Let people just accept crypto and do what they want with the money and see what happens. Let's just see what kind of amazing things we can build. Because all that fundamentally is it is people doing things in an open way that you can verify, that when you're using these systems, you can mathematically verify that certain things happened online, and you can trust a chain of events occurred in the way that you expected, and you have extra information, extra security, and it allows people to coordinate on a scale that was otherwise not possible across borders, with much less conversations, much less gatekeeping. It's the kind of thing that can, for example, have a teenager in Africa or India or somewhere make a contribution to a company in Europe that sells things to someone in America, and it can coordinate all these things. They don't have to talk to each other, they don't have to trust each other, but they can still transact and send value. And they can build decentralized systems that are not managed by any one person in one company, but still are able to grow as fast or faster than a company. And I've done a lot of research into specifically how crypto can accelerate innovation. But the thing is the industry is completely smothered by regulation. Even though there's no crypto regulations, we have too much regulation already. Let's just have none. Let's just see what happens. What's the worst thing that can happen? Someone loses some money? That's a small price to pay for rooting out all the corruption in our financial system and government. There is so much good that crypto can do, and bringing trust into the world, verifiable computation, verifiable state, trustless systems, creating permissionless, inclusive systems that allow people to coordinate together, build things of value, and innovate at levels never before. If somebody is retarded and puts all their money into something that they really shouldn't, and they say, "Oh, I didn't know," it's like, bro, you're not going to ruin this for the entire world. This is a game changer technology. Like, I'm sorry. You need to think about the bigger picture. You need to think about the welfare of humanity. We can't let the fact that you thought that fart coin or the Huck Tua coin was going to be huge, and you put your savings into it, and now you want to ruin one of the most fundamental, important breakthroughs in technology and in the internet in human history because you lost some money. I don't give a shit. I don't fucking care. You should just PSA if you're watching this. Don't think you're going to make money in crypto by investing. You're not. If you're just a normal person, you're not going to make money. Mike Green is right. There's a lot of misinformation out there. You are not going to make money investing. Don't even try. This is useful technology. We don't need that type of speculation. It's fine that it happens. It even potentially can be good in some cases. But just don't ruin this for us. This is important. This is going to be foundational to the future. Okay, let's keep watching. Maybe I should stop interjecting because they're not saying much. I'm saying way too much. And I do hope that we come back, talk a bit more about volatility because it's such an important concept to understand. So let's keep listening. We got 13 minutes left in the video, excluding my commentary.
Prior to securities regulation that came out of the Great Depression, you had these investment trusts and these bucket shops that allowed for unregulated excess leverage in stock speculation. History rhymes, and It's very similar framework. It's interesting. All this criticism of gold. Well, gold in some ways could be considered a threat to the system because I can buy gold in a way that is not tracked by the U.S. government. Take that gold, exchange it to you, and no one knows. No one will ever know, right? But Bitcoin and crypto is trackable.
Yeah, it's been a point that I've raised repeatedly, which is, the single best use of Bitcoin is identifying those who are seditious, right?
Yeah.
You're effectively raising your hand and saying, hey, I'm willing to participate in a system that is against the interests of the United States.
Wrong. I mean, yes, it does identify you, but that is a horrible implication. It just shows that you are a person that is savvy, intelligent, and has morals, because you believe in Enlightenment principles that the US was built on, like the right to privacy, the right to security, the right to be able to do math and verify things that are true. You want to find truth. You don't like corruption, and so you want incorruptible systems that are formally defined, understood, open, and inclusive. That's what it means when you use crypto. It doesn't mean that you're seditious or that you're participating. This is like that line of thinking is some sort of implicit subsidy or a bailout to incompetent bureaucrats and people who try to control the bureaucrats for their own self-enrichment. That is who saying it's seditious. You're seditious against those people. Those people who don't deserve money, but they have it. Don't deserve power, but they have it. Again, I'm not a socialist. I'm not about redistributing anything. I'm not saying that. I'm just saying, objectively speaking, there's a bunch of idiots that have a ton of money and they are willing to do things that are immoral, and they are stupid, and they even are deluded into thinking that they're helping when in fact they're hurting. If you're doing things shrouded in secrecy, you're not being transparent with people, you are not doing anybody a favor. So a lot of stuff goes on behind the scenes. Crypto roots out that, makes it transparent, and you are potentially, by using crypto, admitting that maybe you are a degenerate gambler. It's true. There are people who do it for that reason. But at least it's a degenerate gambler who has the decency to participate in an open, permissionless, inclusive, transparent system. And at least everybody involved has a degree of savviness to know what the next big thing is and to know how to use new technology in a world of boomers. And I don't hate boomers. I love boomers. My parents are boomers. I love boomers, okay? But in a world of boomers, in a world of silent generation, Gen X, we're like, oh, what is this? I don't even know how to access my email. Like, get fucking savvy. This is the future. It should be looked as a good thing if you are using these forward-thinking systems that are going to be the replacement for what we currently have at some point. And as we talked about in the last episode, in the last stream, it is inevitable. The way that the public choice economics works, of how the government will interact with crypto will win, because the incentives will just always be against people coming out against crypto. And it's just it has such a strong footing, and it's the future. So let's not go there. It's not seditious. But I agree, in its current form, it is bad for crime. What I want crypto to be is not good for crime. I want it to be neutral for crime. I want it to be private and decentralized and trustless, and not something that can be exploited by law enforcement to extort people. So what if they get more arrests if they're allowed to spy on everything? It's just not fair, because that is an abuse of power, and it can be used to target political opponents and legitimate people who are advocating for change and trying to hold them accountable. We really need to hold our institutions accountable. It's very important. And when we give them the ability to spy on us and selectively, leak information and blackmail and do all this shady stuff and classify everything and do lawfare and put people in prison and all this stuff, It's like, we need these institutions. We need law enforcement. We need intelligence. Like, I'm so in favor of these institutions like the FBI and CIA and the State Department and all these people I've been giving a hard time. I'm in favor of them. I'm in favor of financiers existing and doing something. But what they're doing is so not appropriate. It's so inappropriate. I mean, all these questions of like, what are these agencies doing? We can't get answers. It's like, there's no accountability. It's like, there's all these open questions about like, did the FBI kill this person, or did they frame this person, or did the CIA assassinate this person, or do this, or overthrow this country? It's like, how the fuck is this appropriate? This is so deeply inappropriate that we don't have answers to this stuff. And it's just fundamentally, the United States is the most powerful economy in the world and the most powerful military in the world. And we can win at anything. And if anything, we're the only ones holding ourselves back by hurting our own economy with bad economic policies that restrict growth and restrict innovation. And if our military, maybe you can argue, oh, we don't have the best hypersonic missiles or drones or whatever, but we have an economic engine that can produce that. And we have the most innovative companies in the world. And we could have even better if we let ourselves, but we don't, but whatever. We will win 10 out of 10 times against anyone else. We don't need to have secrets. We don't need secret subversive plots inside of the government. It's not necessary. We just win. You don't need the CIA to classify a million different things because they're like protecting our interests. We don't have secret interests. If we don't like someone, we just go and kill them. It's just easy. You just use the military. If we need to, like, we don't need that many. I mean, I'm not saying there's no value of any secrets, okay? I'm not saying that. I'm just saying this has just gone too far. It's gone. The fact that we don't know who killed JFK, it's just ridiculous. It's like, sorry, no. Until we have a story that makes sense, 100%, it makes so much sense. It makes more sense than anything I've ever learned. It makes more sense than what is the mitochondria. It's a powerhouse of the cell, something you learn in high school. It should be a completely straightforward thing. This is what happened in 9/11. This is what happened when Martin Luther King was assassinated. This is what happened when JFK was assassinated. This is what happened when RFK was assassinated. This is what happened at Watergate. This is what happened here. This is there, blah, blah, blah. Benghazi, blah, blah. Iraq, weapons of mass destruction. It is just it's not even a complicated subject. We should have very, very, very straightforward, super, ultra satisfactory answers. It should be the most satisfying answer I've ever heard. Otherwise, you have no credibility. And so, yeah, I just don't have sympathy for these institutions. And I want to push them to do better. That's why I'm giving them a hard time. This is why I want to use these crypto systems, because I want ethical, transparent people running these important institutions. I'm not against them, and I'm not against US interests. I just want us to actually behave morally. And I want us to behave in a way that, as a nation, we have a set of values. And to some extent, I may agree with my fellow Americans and disagree. But I want the values of our government to reflect, like the actions of our government to reflect the values of the people that it represents. That's fundamentally what I want. And crypto can do that. I strongly believe. Balaji Srinivasan says how kind of like America is like the child of Britain, like the spiritual successor of Britain. Like there's like the Magna Carta, and there's like this British values and culture, and it kind of, America was like an evolution of that. And we had, and from that, like from the Enlightenment in Europe, we had these ideas that came and went into the Declaration of Independence and U.S. Constitution. And there's an ideology, a powerful ideology that was set by the founding fathers, and it set the tone for the way that the country had thought about things in the centuries since then. But crypto is like taking American culture and enshrining it, the best parts of American culture, and enshrining it into the digital space where there's so much chaos, so much misinformation, so many adversaries. Like, the internet's a dark fucking place, man. There's hackers. We're gonna be facing AIs that are trying to manipulate us. It's gonna be dangerous. I mean, pornography is out there. I mean, that can really damage people's psychology. And TikTok doom scrolling. Like, people are gonna start getting what's called wireheaded, where you just are online and you're exposed to content and it just fries your brain and you just get ultra addicted. This is already happening. It's dangerous out there. We need to build systems that we can trust. We need any sort of semblance of grounding to reality in the digital realm that we can. I mean, I would almost say, let's just turn off the internet. Let's just throw it all away. But it's too valuable. We need to make the internet work, but we can't just take these old ideas that these boomers have about how the world works and then just apply securities law that was like securities law was like invented because there was some guy who like went to like each town and like was like, oh, there's like if you give me $1,000, I will give you $2,000. And then he would do these things and go from town to town and like do some stupid, like, what the, like, that's just so irrelevant. We need to rethink this. This is not like, whatever. It's not like, oh, he was a bandit and he was, the bank is now cleared out. The account is now cleared out. Oh, like, we're going to have to whatever. Just like think about some movie or something of like the olden times. It's like of like old America or something. I don't know. Whatever. I don't know what I'm saying. The point is securities law is based on very old problems, or at least maybe not very old problems, but problems that are just not the same as the world today. And we're in a different circumstance. So, not to give these guys a hard time. Again, I love Mike Green. He's like such a genius, and I'm going to praise him in future streams because I want to go into his thesis on the stock market. It is so good. It is so insightful. And I talked about this on the first stream I did called What is Vol? And I talked a bit about this, but we're going to go way more in depth on this. And so he has a lot to say. I just don't, I even agree with him on some things about Bitcoin, that it's overhyped and overlevered. I agree. And I am even in some ways more of a critic of crypto culture than he is. But yeah, I just don't agree with some of the framing. And I just like pushing back. And it's because I love him that I push back, because I want people to be better. I want our institutions to be better. I want crypto to be better. And I want Mike Green to be better. So I'm pushing back. This is my opinion. And this is my feedback. Let's keep watching.
Personal profit. I don't want to go too extreme on that, and I don't want to focus this around those dynamics, but I do think that, there is this element of both of us understand what the Bitcoin community or the crypto community is seeing, and it just becomes a question of, will that actually play out? And we can't know the future. But what we can know is that there are ways of constructing portfolios that are different than has been done historically. And you have actually, you're coming out with a new product, but you released a white paper on this a while ago, the Dragon portfolio.
Oh, here we go. This is going to be good.
We're starting to bump up against time, so I just want to make sure that we talk a little bit about that. Can you very quickly give a description of the Dragon portfolio?
Yeah, there was a paper that I did last year. It actually came out before the March crisis. And I looked at 100 years of asset return history. And I want to answer just this simple question. If you could have one portfolio for 100 years that protected you through secular decline, secular growth, what portfolio would that be? And I found out a very different asset allocation that I think was popular with pensions or retirees. The portfolio actually replicated all these different the research replicated all these different financial engineering strategies. And the portfolio that I came up with was relatively simple. It's about 1/5 stocks and equity-linked products, 1/5 fiat alternatives like gold, 1/5 trend and momentum, commodity trend, 1/5 high-quality bonds. That portfolio, which is really interesting, we're able to track it over 100 years. We're able to track it in real time. And the real-time dynamics are done with various hedge fund indices and the actual underlying assets. Last year, that portfolio earned about 35 to 40%. And the point about the Dragon portfolio, the concept behind the Dragon, is that you're supposed to be able to profit in every market regime, whether it's deflation or inflation or secular growth. The 60-40 portfolio is uniquely oriented towards periods of normalized interest rates and secular growth in equity-linked products. The problem is when you go through a period of secular decline like the 70s, or you go through a period where there's stagflation, or you go through a period of secular decline where there's deflation like the 1930s, the classic kind of pension portfolio, 60-40 bond split portfolio, obviously underperforms tremendously, either on a real adjusted basis or your bond cease to provide diversification. This concept of the Dragon dynamic actually can perform through every market cycle. It does require a little bit of use of portfolio margin to hit the return target, because a cash exposed Dragon portfolio over 100 years only earns about 5% with a limited drawdown. But if you actually use notional and portfolio margin, you can bump that up above the actuarial targets of or the pension targets on retirement targets. And in doing that, you can get a 7 to 12.5% annualized return with 1/5 the drawdown that you get from many other portfolios, ranging from 60-40 to risk parity. Last year was such a perfect example of this, because going to March, you had this massive deflationary shock. Well, long volatility and to a certain extent, treasuries buffeted that shock. Then in April, you had a huge rebound in equity prices, and that's where your equity-linked products did well. In the summer, gold exploded, and you had your fiat alternatives basket. And towards the latter part of the year, you had an equity runoff top combined with outperformance in trend-following commodities.
Mm-hmm.
So a year like last year, so if you look over it since 2007, this portfolio looks and tracks a lot like the 60-40 portfolio in performance. But a year like last year, a sharp divergence in this portfolio, huge divergence in this portfolio.
So I want to focus in on this. So basically, he's saying that he has he designed a portfolio called the Dragon portfolio. And so as you can see here, there are 5 different pieces of this portfolio. And so each one would be 20%. So 20% of your money would be in equity. They might have a pie chart or something later that shows this, but I'm just going to go through it now. There's 20% would go into equities, which would be like stocks or something like the S&P 500 as an example. And then 20% would go into bonds like treasuries. 20% in each of these categories. 20% would go into gold, and 20% would go into volatility, which we'll talk about in a sec. And 20% would go into commodity trend. Okay, what are those categories? I don't know if he's going to explain this, so maybe I'll explain it now, and hope if he explains it, you'll just have a better explanation at the end of the day than what I would give. But so you know about stocks and bonds. Everyone knows about stocks and bonds. Everyone knows what gold is. Well, what is vol and what is commodity trend? Well, okay, volatility, you can go, there's basically 2 things you can do. You can go short vol or long vol. And I think what he's saying here is he's talking about going long volatility. So what that means, so one example of going long volatility would be to buy options. So you buy some options, and basically, if the stock, you basically buy the option to, for example, buy the stock market at a very low price if it goes up high, for example. And maybe the stock market won't go up high, but if it did, you would have the opportunity to buy at a discount. That's a kind of financial investment you can put. And then similarly, if the stock market goes really low and drops really low, you could buy the right to sell it to somebody for a high amount. And so what would happen if you did that, if you did this options trading, what you could happen is you could profit from the volatility of the stock market. So if the stock market was very volatile and either went up by a lot or down by a lot within the time that you were holding this position, you would stand to make a ton of money. However, if the stock market didn't go up by a lot or down by a lot, it just stayed relatively within the margin of what people expect it to do. In that case, you would basically make no money. And so if you did this trade, it's a little bit complicated, but essentially, usually it might not be worth it if you do it in a naive way, because you have to actually spend money on these options contracts. So you're spending money on these options and you're basically bleeding money. So like not only are you, for example, not investing in an underlying asset, like buying more stocks, for example, that's going to give you real value and have a real return. Not only are you foregoing that, but you're also the value of the contract goes to zero if this event doesn't occur. So like, let's say you're taking a bet that there's going to be a lot of volatility and then there's not, then all that money goes to zero and you're actually had to spend money and take money out of what you otherwise would have invested. And you're basically paying a premium on this. And so that's a very hard position to take. So I think the reason that Chris Cole is advocating for this 20% allocation into long vol is because he has a long vol fund. So the implication here is that you could put 20% of your net worth into his fund and you would follow the rest of this dragon portfolio. Or maybe he might even have like a dragon fund where it just does it all for you. But point is the vol fund, his vol fund, you put 20% into. And that's of course how he would benefit from you following this. But he's showing the quantitative analysis here to show why it works. So what is commodity trend? Commodity trend is a trading strategy that is it's basically trend following, and he's for whatever reason, like a trend following is a trading strategy. So it would be like a type of hedge fund that you would invest in that would do trend investing, I guess you would call it. And so you would do this type of trend strategy in commodities specifically. I don't know why he chose commodities, but he did. And he says that in his analysis that worked really well. So what you have here is you have equities, bonds, gold, long vol, and commodity trend. And let's just call it trend. So out of this, there are short volatility investments and long volatility investments. So a short volatility investment would be equities and bonds. This is shorting volatility because essentially, there's probably I'm trying to think. I'm not going to be able to represent very well why those are considered short volatility, but I will tell you that they are considered to be short volatility. I think like on a very philosophical level, you can kind of see this as like the status quo investment that is going to be good assuming nothing changes. But if there were drastic changes in the economy, you can imagine that now what was traditionally considered to be a good investment would no longer be an optimal investment. And so those are essentially short volatility trades. And so if volatility is down or goes down, these are going to do very well. On the other hand, there's long vol trades. Gold could be thought of as a long vol trade. If there's turmoil, economic turmoil, gold goes up. Long vol itself is a long vol asset class. And commodity trend, I'm not sure if that's considered long or short vol, or if it's just kind of like a uncorrelated, like basically like something that's kind of like uncorrelated to volatility. So let's just assume that that's right. I'm kind of making this up, but I do know a bit about this. So that's why I'm saying it is based on some things I've heard, but I'm not 100% sure on this. So I'm going to speculate and then we're going to hear his explanation. But So if you kind of think about this, this is kind of like a 50-50 long vol and short vol portfolio. Basically, it profits if things stay the same that they've been in the past 40 years, and it also profits if things get drastically different. And then there's also just that diversification from commodity trend. And if you see this top line up here, these returns are fantastic. Now, risk parity is a similar type of strategy, except as you can see, it doesn't have this volatility component and this long vol component. It's basically levered up short vol, which has worked in the past few years. But imagine if there is some sort of tail event, some sort of economic crisis that could completely wipe out the risk parity portfolio. It's very dangerous because you're levered. Things could go really bad. The 60-40 portfolio is just basically, it's similar to the above. I mean, to risk parity essentially. It's not levered. The returns are slightly less. It's probably slightly more protected under for certain tail events. But there is like meaningful amounts of there are like very sophisticated reasons why this is a good portfolio construction. But you can see the returns are good, but not as good as the first two. And then, of course, the S&P 500. This is what everyone typically recommends. They're like, just buy the S&P 500, blah, blah, blah. Like, this is like the standard advice that you get. Index funds, S&P 500. It's not actually the best. It doesn't have the best return profile. And there's a lot of reasons to believe that just investing in the S&P 500 is probably a bad idea, which we're not going to talk about now, but we'll talk about that another time. So anyway, this is his breakdown. As you can see, the Dragon portfolio, I'm just taking his word for this, but I do think he's credible. The Dragon portfolio outperforms these other portfolios. And it also presumably is a lot safer. Let's keep watching.
Massive outperformance, and it manages to make money through every phase of that extreme cycle that we experienced last year.
Well, that's part of the reason we're all so exhausted, is because last year basically was 4 years, right? So you went through each of these cycles with the rebalancing dynamics associated with a portfolio that rebalances across those assets, effectively being optimized for that type of framework, right? So you had 4 opportunities to profit, rebalance, profit, rebalance, profit, rebalance. That's kind of the extreme version of the portfolio. But the overall feature that I would highlight that you're incorporating, and this is one of the things that people have heard me talk about, is that you are devaluing the Fed put, effectively, the value of the response function from the central banks of lowering interest rates in the exposure to excess volatility, which causes a spike in bond prices, right? You're reducing the impact of that in favor of a long volatility component to it. I would argue that's the primary improvement over, say, a risk parity or a more traditional portfolio construction. Does that feel fair?
Yeah, it's completely fair, but I might elaborate on it. Although, like long volatility and convexity, effectively what Artemis, that's the bread and butter of Artemis since our inception. Most people, that dynamic really is vol trading in the classic sense of tail risk and long vol exposure trading, trying to have convex exposures with minimal carry. But actually, the other two components, namely gold as right tail exposure. So in that sense, there's a long volatility component to gold and other fiat alternatives. And there is a volatility component to CTAs and commodity trend following, or trend and momentum following in commodities, because that strategy does very, very well in periods of stagflation. And we talked about this earlier, autocorrelation. Whether that autocorrelation is deflationary in the 30s or whether it's inflationary like the 70s. So in essence, you have these 3 forms of long volatility that augment each other based on either left tail risk, right tail risk, actual volatility in equity markets, or gamma or trend in markets. And that is, you devalue the Fed put and you increase exposure to these other forms of volatility exposure to really about 3/5 of the portfolio that have these characteristics in it. In essence, to take the place of where treasuries would traditionally lie in the classic kind of pension portfolio. There's nothing wrong with treasuries, but I think as we know, and we've talked about ad nauseum, and we've talked about this for a long time, is that the effectiveness of high-grade corporate debt becomes problematic at the zero bound. So in many ways, there needs to be an alternative to the Fed put. You sit there and say, well, you have fiscal and monetary policy in other means other than lowering rates. Well, that results in unintended consequences. That things like CTAs and gold and volatility can also monetize. So we're very excited about that. I never really intended to. When I wrote this paper, it was truly an intellectual exercise. Mm-hmm. There was no kind of I wasn't thinking about creating a portfolio or launching something or doing. It truly was created on this organic framework. I understood and I kind of intuitively knew when I began the paper that volatility would be something that would be valuable. And I wanted to show that over a longer time period than just 2008. Mm-hmm. But the result that came out of that paper is something that I think is increasingly, and I feel so happy that there's a small cottage industry of people that produce little videos about it, that and other writing about it, that I think truly is an alternative that should be adopted by pension systems.
I think the interesting thing, so first of all, I actually agree with your underlying assertion and would highlight that it is a happy coincidence when an individual like yourself who has done so much work to raise the awareness of volatility as an asset class is able to provide a concrete example of here's how to deploy it in a portfolio. It's one of the biggest challenges that I think people face as they think about portfolio construction going forward. Others have heard me say this. I think
just really quick, that was a great explanation. Definitely, he corrected a few things I said, specifying specifically. For example, it seems that gold is a kind of like a long volatility, like a hedge on one tail specifically. And there's an element of commodity trend that also is good at, I guess he was saying it's like a kind of a long vol strategy, but specifically it seemed to have to do with times at which the market is autocorrelated, and the market, the more that the market is trending, the more that this trend strategy works. What he was saying earlier on in the interview, in a different video, he mentioned this, not in this one, but he had said that right now there's a lot of mean reversion in the market. So it's a kind of very much a kind of buy the dip type of a thing. Like that works. People say buy the dip these days, and that's really a modern phenomena where that works. Basically, if something goes way down, you just buy it because it's probably going to go up. If something goes way up, you should probably just sell it because it's probably going to go down. That's the kind of behavior that markets, according to his analysis, have been doing. They're less autocorrelated. They revert to the mean, as he says. But there have been times in history where basically, if you tried buying the dip, you would lose big time because that thing would probably just keep going down a lot and it would not rebound. There wouldn't be lots of major rebounds and stuff like that. So at that point, trend is very powerful. And I guess he is, maybe that is a sign of high volatility when that happens. I'm not sure. But anyway, he was giving more detail. I thought that was a brilliant explanation. I'll just kind of leave it to you to hear all the nuance of the things he said there, because I want to finish this video and see their concluding thoughts.
We're in an incredibly innovative time, or we're about to transition to a really innovative time where we begin to recognize that the 60-40 portfolio, or the levered variant thereof, the risk parity type portfolio, is increasingly incapable of fulfilling people's objectives and properly managing risk exposures as we look forward to a different world. Now, my kind of unique contribution to it is the dynamics of what happens with the migration from active to passive within the equity space and the bond space. And that creates some unique characteristics that people are well aware of my views on at this point. But I agree with you that this is a very exciting time to see people start to play around and rethink some of these dynamics. As we head forward, I want to make sure that you and I get more time to chat in front of viewers. So can I ask you to come online to talk in probably 6 months as we get closer?
I would love to. I would love to.
Fantastic,
love to.
Chris.
Yeah.
Thank you so much for joining us. I really enjoyed it. It was fantastic to see the beautiful skyline behind you in contrast to my violently shaking California maps. And I really look forward to doing this again soon.
I do too. Well, your violently shaky California maps. Well, a couple of weeks ago, we rescheduled this interview because there was no power. Our office had power, but there was no power or water in most of Austin. So
yeah, exactly. People wonder what would cause the internet to go down. They were not thinking ice storms in Texas, but
yes,
anyway. Chris, again, thank you for joining us. I really look forward to talking with you in a couple of months.
Thank you, Mike. It was a lot of fun, as always.
I hope you enjoyed.
That was it. It's funny. We're just right now in the news is these fires in LA. And I do remember that there were ice storms in Texas a couple of years ago, and that was pretty catastrophic over there. But it's funny, like, Texas and California are often considered to be the polar opposites, one conservative, the other liberal. One is, they're both, big powerhouses, huge populations, the most electoral college, votes. But it's really funny that basically Texas's natural disaster was a mass freezing, and then now California's horrible fires just devastating LA. It's a firestorm. So that's very, very funny. Not funny, it's tragic, but you know what I mean. So anyway, thank you so much, everybody, for tuning in to this episode. And if you like this, please subscribe, like, comment, share. It's very helpful. And I'm going to do a lot more. I'm going to cover a lot more conversations with Mike Green and Chris Cole. I'm going to dive into a lot of Chris Cole's work. We already covered some foundational topics relating to volatility that are going to be super important going forward. But beyond that, also diving into, I think people are going to really, really enjoy learning more about Mike Green's thesis. Mike Green has just done work that it's less technical and it's very easy to understand, but it's fascinating because basically the entire market is distorted and we are headed for a disaster, and the evidence for this is very good. It's very compelling, very interesting. It'll definitely open up your eyes into how financial markets work. And I think my goal with covering these topics is twofold. One is I did this video called Cryptocurrency is Cryptography. And we talked about some of the mental models for how you should think about cryptocurrency as a subfield of cryptography. And I built an intuition on that, on like how it is providing a very essential function relating to reducing the uncertainty in cryptographic systems that builds over time due to entropy. And what I want to do is I want to use volatility as a rationale for why it enhances the capabilities in a like I'm kind of going to give you a preview of this just off the top of my head right now, and I'm going to do more later, but basically just like the Dragon portfolio benefits from having this long vol component instead of basically just being a short vol 60-40 portfolio, the type of things that you can build with with cryptocurrency technology is way better than the things you can build with just traditional cryptography. And I'm not going to go through the whole thing, but essentially cryptography is like cryptocurrency is like short vol cryptography. Cryptography is a long vol thing. It's like the reason why you do cryptography is you are concerned about a threat that's going to shake the system and destroy everything. It's like if there's like a big change or volatility, you're protecting against that, and you have a very high degree of certainty you have a very high degree of certainty that it's going to work, even if conditions change immensely and we get much more powerful computers. You still know that these cryptographic systems are not going to be broken. And so it is truly a long vol security measure, but it's also costly and it's restrictive, and there's just things that you can't do. And adding a short vol component extends the capabilities. It makes it cheaper, meaning it can be applied in more use cases. You can have security in more use cases, and it extends the capabilities. And that's what cryptocurrency does. It's like, you can think of cryptocurrency as a version of cryptography. And I'm not talking about the currencies as an investment. I'm talking about it as a technology. The underlying technology uses cryptography, or it's like a form of cryptography that can be broken under a variety of edge cases and plausible scenarios. It is possible for someone to 51% attack Bitcoin. It's not inconceivable. It's inconceivable that somebody's going to crack your private key. It's not inconceivable that somebody is going to do a 51% attack. But with the 51% attack, but what the consensus of Bitcoin does is it provides a mechanism that you can never do with just pure cryptography. It extends the capability, but at the same time, and it can also do some things that you could use, for example, not to get too technical here. There's a thing called a ZK proof, which proves, sorry, it's getting so dark here. I didn't have the lights on when I was recording this, and now it's getting dark here, but sorry, going on a tangent. But anyway, there's a thing called the ZK proof. A ZK proof is essentially, there's a lot of ways of thinking about it, but one thing you can think about it is a mathematical guarantee that some computation was calculated correctly. Like, for example, if you said, what's 99 times 6,432? And I told you the answer, you wouldn't necessarily believe me. I mean, you could, but maybe you don't. And I could give you a proof that when I plugged it into the calculator, that I did that properly. And you could check that proof, and you could know that I actually calculated this the right way and that calculation was correct. That's essentially the high-level idea behind a ZK proof. And so the Bitcoin balances could be proven using ZK proofs. Instead, there are crypto economic incentives that underlie some of the ways in which we use Bitcoin. And that's because some of that technology didn't exist at the time. Like, ZK proofs were not very developed at the time. Now we could make a better version of Bitcoin that uses this technology. And we could talk about that subject. It's not important. The point is that you're able to achieve things that cryptography can achieve with crypto economic security. And this is something that works a lot of the time, but it doesn't work in situations of high volatility. With that said, that is sometimes you don't need to be protected against high volatility. And so to have both of those tools in your toolbox is extremely powerful. And so this is a type of way that volatility can enhance cryptography. The understanding of volatility can show. Understanding volatility lets you know how cryptocurrency can enhance cryptography, which are typically thought of as distinct things. There's a battle over who gets to be called crypto, but really both of them should. Cryptography is a subfield of cryptocurrency is a subfield of cryptography. Sorry, there's a lot of words. I'm getting them mixed up. And that's one point. And then the other point is I do really like to just dive into the systemic problems with the financial system. We talked a bit about some of those today, but there's a lot to learn and just a lot to understand about the problems just in general, about kind of like, I wanted to have an episode called The S&P 500 is a Meme Stock and kind of make that case. That would be based off of Mike Green's work. And it really is an overvalued meme stock. Like, it's a meme. It literally is a meme. And there's really not a fundamental difference between the S&P 500, GameStop, AMC, and like, meme coins in crypto. These are all just different scales of the same thing. And I want to make that case. It's going to be very, very interesting. And then at the end of the day, I want to also make the case for why these structural problems exist, who's getting rich because of these structural problems, and how crypto can fix it. And along the way, I will be also sharing the downsides and the problems with crypto. And I'm not going to always be pumping up crypto and talking about it as a good thing. It's a nuanced subject. But anyway, it's getting dark here. You cannot even see my face. It's hilarious. So I'm going to call this a day. I stream every single day, Monday through Friday.